Oh man. Whew. What is it, Tuesday? Tuesday, March 4th. It hasn't not Friday yet. Oh man, this market's nuts. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is pretty similar to yesterday, except I bought SoFi today. Okay. Let's talk about it. Let's talk about it. So, well, is this market really up? Where do we close? Are we up $2.40 after hours already? I don't even know what percentage down we actually closed down. I'm not good enough at math. We are up. Now it's $3 from the close. Even with being up $3 from the close, we're down 0.7%. So I'm not sure. I need someone to actually give me a quote, if it's possible, on how much down we actually closed. Probably more like 1.25% down or something on the SPYs, guesstimating. QQQ here is up $2.50. Thanks, Bill. QQQ here is up $2.50 from the close in print. Now it's showing green. It did not close green. It closed red. Yeah, SPYs finished down 1.2-ish% on the day. And the IWM here is also up over $1 in the last 14 minutes since we closed, to be down 0.6% from that point. So anyway, bottom line is the market did not close well again today, but holy cow, were we all over the place. And tell you what, I don't think we could have navigated it better as a team. I mean, we in the pre-market today called this price action, maybe not like the exact part of the close here, but we called this opening price action like really, really perfectly today. So definitely hyped for that. So let's do a little bit of a recap. There was a lot of opportunity out there. I had a great day today. I could not have traded better today. I think the call outs were excellent, and I hope you guys were able to participate in that. So this morning when we were doing the morning meeting, we were trading around SPY 580, and it was a day 2 gap down with the market at extreme extension across the board. SPYs at that point were just a bit over $10 extended when we were doing our morning meeting. The Qs were, where did we open the Qs today? I had to pull up another chart on my other screen. Yeah, when we were doing the morning meeting, Qs were trading at like $4.95. So yeah, the Qs were opening up like $13, $14 extended. The SPYs were opening up between like $10 and $11 extended. And the IWM was set to open up at around, it was trading around 206 when we were doing the morning meeting. So they had about $8 of extension. So all three of our indexes, the way that I categorize it, were set to open at extreme extension today. And again, that's what the SPYs at 580. And what I was saying in the morning meeting today, and I think it was, pretty good in hindsight, is that, hey, we're set to have a day 2 gap down. I'd prefer if it was day 3 or day 4. We're set to have a day 2 gap down here with all of our indexes at extreme extension, but it's a gap down into support. 580 is this huge support level that we've been talking about literally since December. Actually, since November. We've been talking about the importance of 580. So huge gap down, day 2 into support with extreme extension across the board. 9 times out of 10, I'm coming and I'm buying. And what I said in the morning meeting today was, this is the 1 in 10 time that I'm not buying. I felt it was too early. I also did have some long positions on. So if we opened up at 580 and immediately rallied off the open, it would not have been the end of the world for me. I've got some long positions on. I added to the swing longs that I had on, but I was being patient insofar as doing anything new. So if you're coming in the day flat, you want it to start, a little bit at the open on some longs, just because, again, extreme extension of the downside on a day 2 gap down with short-term tactical in the green zone, and us gapping into support. I get it. But the spot that I mentioned, or the zone I mentioned in the morning meeting, was really looking for more like SPY, the zone between 574 and 577. And that was just kind of a broad zone where then you want to turn to your smaller time frame to try to get some sort of signal to be able to buy. But at the lower end of that range at SPY 474, we would then be $17 basically extended from the ADMA on the daily chart and the SPYs. That's getting to be really, really big at that point. And at lows today, the low ended up being 572 quarter. So we even actually overshot the range that I was looking for, and that's what happens in these crazy volatile markets. You can certainly overshoot in both directions what you expect. You overshoot on the downside in terms of how big you think the sell-off is going to be, and then a lot of times you overshoot on the bounce as well, which also eventually happened intraday today. Oh, SPYs are just ripping up right now. We overshot on the bounce in a big way today also. So that's what happens in these huge volatile markets. But at lows today, we were basically $18+ extended in the SPYs. Who's Lutnick again? Tariffs compromise announcement likely tomorrow? U.S. Commerce Secretary. What does that mean? Trump is to move with Canada and Mexico, but not all the way. So he's going to reduce it now? I just can't with these headlines. Josh did have a great call in the morning meeting today, though, if it happens, which is that news announcements are basically surprises to the upside at this point, because now we've done it. So anyway, kind of continuing analysis. At lows today, Q's traded through the 200-day and traded down to below 488. So we were at $20, over $20, almost $22 of downside extension in the Qs today. That's starting to approach some of the biggest downside short-term extension off the ADMA that I've ever seen in the Qs. And obviously we're trading higher on a percentage basis now than we were in like 2022, which is a lot of times when we were dealing with this. Just the dollar amounts are bigger, so the percentages mean that you get bigger dollar amounts. But that's like, we were really, really, really extended down at lows today. And I think that the good call was, hey, I want to be patient off the open. Lutnick says Trump is considering relief for USMCA compliant goods. It was, hey, I want to be patient off the open. These tariffs actually are going through. No one actually thought that they would. And now here we are, less than one business day later, and it looks like he's already pulling back on them. But I also, whereas I agreed with Josh that the headline risk is actually now to the upside, which is exactly what we're seeing happen after hours right now. The flip side is I also still think that the market is still, even this morning, calling out Trump's bluff that he's not actually going to fully go through with all of these tariffs. And that maybe he leaves them on for a little while and still uses it as a negotiating tactic. But if he was like, I promise no matter what, for the next 4 years, we're going to have 25% tariffs on Canada and Mexico and everything else that I'm saying, it would cause a huge bear market. It'd be a 20-30% down market from highs. And at this point, I don't know where we got to at lows, but we're 10% plus in the Qs and a little over 5% in the SPY. So, we've started to enter into a market correction, but it's by no means a bear market at this point. So anyway, the call for patience off the open, I think, was the right call. We pulled back real hard here. We extended down at 10:20. I remember watching this 5-minute bar come in at 10:15, watching that extension down, and further calling out the long opportunity, which I had already started by that point. And then, we ended up kind of creating. I was a little bit worried that this was turning into an H pattern, but I felt just with the massive amount of downside extension that we had, that we could bounce back further. And then it was a huge bounce back. I mean, we rallied from 572 quarter to 585 or so in just a couple of hours here. I mean, a $13 upside move, and that was just your bounce. So just a crazy market. We called it perfectly. There's just a ton of opportunity out there right now. Volatility definitely increases risk reward, but overall it increases opportunity. So we definitely want to embrace these big movements. For anyone who is more of a seasoned trader, this overall should really be your time to shine right now. I understand that if you're like a brand new, more entry level style trader and you're immediately thrown into a market with this amount of volatility, it actually can be difficult because the movements are so fast, and inherently, as volatility increases, you have to risk more to make more. So sometimes that could be uncomfortable for like a newer trader who's kind of first getting in the business and first getting started. But for sure, for people that are seasoned, this is an environment, just from a pure trading perspective, to be excited about, because you can catch a $13 intraday bounce, and then into that bounce at a certain point we started shorting again and calling the shorts out again for shorter term trades. I'm actually surprised by the degree of this sell down into the close in the last 30 minutes, but again, that goes back to what I was saying earlier about how this market can really overshoot in either direction. It's just inherent in inherent in the market, I guess. It's inherent in increased volatility. Ideally, Lutnick is saying Trump may roll back Canada and Mexico tariffs tomorrow as the headline. I always feel like ideally you want like a middle level, a middle ground of volatility. We don't want it where you've got the positive $11 billion of gamma that insulates the market from any actual movement. But sometimes when you're having what was this pullback? This pullback in the last 30 minutes from 585 to 570. It was a $10 pullback in 30 minutes. Can almost be a little bit too much. But, broadly speaking, there's a lot of opportunity that's out there right now. I don't think we could have called it better today as a team, just in terms of wanting more extension on the downside than we normally would, calling out the small time frame execution on it, capturing the huge bounce, then calling the shorts out on the top. I mean, this is really good stuff. So we will obviously continue to monitor this insane market, but now that we're getting these headlines that Trump may roll back the tariffs tomorrow, it could really create some further follow through on this bounce. And if anyone remembers, just to give myself a shout out, when the market was breaking back through 610, I thought that we could get a pullback to somewhere between 570 and 580, and then today's low is 572 quarter. So we'll see. We kind of fulfilled my expectations on the more immediate sell-off that this market can bring. I think that if we start to see more headlines about Trump rolling back tariffs, it'll give us a much bigger relief bounce, and then we can take things from there. We can see how things evolve. We can see if there's a potential of a growth scare that can come into the market, and I guess that's it. Trying to think if I have anything else really to talk about. I mean, from an individual stock perspective, it's also kind of like I said in the morning meeting, when the market starts moving this crazy, correlations tend to really increase. So everything is based off the market. You start with market first, and then you go to your stocks. So in the morning meeting today, I was like creating a list for myself of names that I was potentially interested in buying if the SPYs work their way down to the 575 area today. So I was thinking, you know, NVIDIA, I put a bid out in front of NVIDIA pre-market at 107, never got filled on it. I put a bid out in Palantir at 76 quarter, I think, to start a long. Never got filled on it. But other names, as the market was opening, we saw Google trading relatively strong. So when the market was getting hit and the market I felt was finally getting close to a bottom, I initiated a Google long off of this tail originally right here at 10 a.m. Which we were also, it's when we were expecting the margin selling to come in. So the market gave a down tick at 10 a.m. Google gave a down tick at 10 a.m. It was overall relatively strong, and I was like, all right, I'm buying Google there. And when the spies got into the area where I wanted to be long, that's when I started buying TQQQ. And when UVixy was getting to $25, I started shorting UVixy. So it was really just kind of waiting and being patient on the extension, and then having a list of names ready that you wanted to come in and buy. Some of them never triggered for me. Some of them obviously did. Oh, Meta was the other one. I ended up doing really well with Meta. I started buying it around 6:30. My game plans on all those trades at that degree of extension were more of a build-in type of game plan, where I was actually just continuing to add as those positions move against me, work the ranges, take them off when they move in my favor, size in, size out, and just kind of take advantage of the extension without necessarily having to like perfectly time an exact entry. And you know, it worked phenomenally well today. Meta is my second best name of the day. TQQQ is my third best name of the day, and UVixy and Google were also pretty solid. I'm trying to think if I have anything else really to talk about. Such a crazy day. I almost feel like my brain is a little bit scattered, and the more I talk, the more I'll remember to talk about it. Yeah, I got back into SoFi today. Started buying it at $12.50. Just looking for a move back to 14 in it. A little bit of a bigger picture trade. I'm still a little nervous about the big picture of the market environment, so not being too greedy on it. But that was another one that worked out really well, all things considered, intraday for me today, and was able to make a few bucks. All right, that is all that I've got for the moment until more things pop into my brain. I am happy to answer any questions about anything. Eddie wants to know what an H pattern is. Sure. So an H pattern is kind of like what it sounds like, except it's a lowercase h. It is when the market gives you a pattern that looks a little bit like a lowercase h. So you get a down wave in the market, and the spies almost did one today. You get a down wave in the market like we had off the open. You get a bounce off that market, which is a price time correction. It's kind of both a price time correction. And then you get like not like a sharp pivot high that directly leads to a new low. It's like you get that pivot high, and then that pivot high kind of rolls a little bit like a lowercase h. It's like a little bit of a rounded pivot top. And then when you get back down to the previous low, that then becomes the pivot high of a downtrend. You break through the new low, and then you continue down. So that's what an H pattern is. It's basically just a type of lower high. When an H pattern is forming, it can sometimes look very similar to where you're asking yourself, like, is this an H pattern or is this double bottom? Like, is it double bottom where you're getting like that W style pattern where it comes down, gives you a bounce, gives you like an equal-ish low. Usually, actually, the second low is slightly lower than the first low, and then you break higher. Or is it an H pattern? You work your way down, create the pivot low, you bounce, you roll down, but then you blast right through the previous low and kind of continue down. Sometimes in the moment it can be difficult to actually tell what it is until you see how the pivot here is basically breaking or holding. So something to notice, but I thought that just with the degree of downside extension that we had, you know, could we sell further and panic sell? Yes, of course. Can downside extension become even bigger downside extension? Yes, of course. But we were at a point down there where it really just seemed that the much higher probability situation was a little bit of a bigger bounce back trade. So that's what an H pattern is. From Jerry C. How do you game plan in such an environment? EMA, support resistance, etc., seem to mean very little. So first of all, completely disagree with you when you say EMAs mean very little. I think that they mean even more if you use them properly. And you have to remember that moving averages are not support and resistance, right? So they're not. If you expect the market just to hold a squiggly line, you got another thing coming. So moving averages is a measurement of extension and trend, which is what they are tools to utilize. I've never seen an environment where that doesn't work. When volatility increases, extension from those moving averages before correction can become much bigger. I mean, that's just the nature of volatility. So you have to, think about it in that regard. With support and resistance, so first thing on what you want to remember about support and resistance is very rarely like a specific price. We try to narrow it down to a specific price as much as we can, like SPY 580, huge support level. But in reality, it's very rarely a specific penny. Support and resistance is usually like a zone of supply or a zone of demand, which inherently makes it a little bit trickier to trade. And then also inherently, when you have higher volatility, things can kind of overshoot with tails and undershoot with tails in a larger way. So when it comes back to game planning, the way that you account for higher volatility tends to be that you take less size and give more room. So in a normal volatility market, you might be buying 1,000 shares and risking 10 cents. In an increased volatility market, you might be buying 500 shares and risking 20 cents. And it's the same dollar risk. But because the movements are so bigger, the trades require more space, and the flip side is that they have more reward potential. So you want to be thinking about that when you're thinking about your game plans. If you're just trying to trade off of some super tiny little pivot point or whatever that isn't necessarily important or an important area, it can certainly be difficult. So you can make some sizing adjustments for an increased volatility environment. But outside of that, for me personally, I don't do anything different. Outside of that, I don't do anything different. Maybe you want to be even a little bit more patient, right? Going back to what I was saying about the market tends to overshoot more on the downside and overshoot more on the upside than you might otherwise expect it. So therefore, you want to be more patient. But that's exactly what I was talking about in the morning meeting today. Whereas normally, I probably would have been trying to aggressively start buying 580 in the SPYs today. Today, I'm like, 574 is the lower band of the range where I'm considering to start really looking at. And we even overshot that. So that's just some of the things that I think you want to keep in mind from a game planning perspective is basically just more patience and more space risk, but also you need to make more to make up for it. That's another thing that I think can be a little bit tricky for newer traders as well. This goes back to something I know Josh likes to talk about when he says, don't trade the crazy expensive names if you are a newer trader, because you're going to take a lot of risk, but you're not going to be there for the reward because you're going to think that you're in the money a lot and you're going to take it off. It's the same thing here with the increase in volatility. Like you might think like, oh man, I'm long from 573 and it just went to 575. I just caught this huge $2 move in a very short period of time, and the next thing you know, the peak of the bounce is $10 higher still. That's just the environment we're in. So hope that helps, Jerry. So if I game plan, you have to 14. Is there like an inverse pattern to an H pattern for the long side? It's not something that's ever spoken about, but in theory, it should work the exact same way. It's just that there's no cool name for it. But yeah, it should work the exact same way to the upside, and something to watch out for. I think I got through everything in the VTF for the moment. Over on the YouTube from Robert, what would you recommend for traders to stay mentally strong, focused all day long, especially in days like today when opportunities are showing up all day? It's a great question. Great question. So what do I recommend for traders to stay mentally strong and focused all day long, especially days like today when there's opportunity all day? For sure. Sometimes we can get a little lazy in the middle of the day because there's not much going on, and then today there's constantly stuff going on. Um, I really think that when it comes to having the mental stamina for the entirety of trading days that are like today, it's actually just about taking care of yourself when you're off the screen. It's getting that good night's sleep. It's eating well. It's taking your vitamins. I really think that all that stuff is important to maximize your mental fortitude and focus. Um, I know it can be a little tough. I feel like I find that I get a little less sleep when things are crazy and I've got the swings on because it's like, oh man, I want to be up. I want to be up and awake and logged in at 5 a.m. Eastern, 3 a.m. local to get my game plans going and start doing my research. But overall, it's about taking care of yourself. I think is the most important thing, and watch what you eat. Don't be eating anything crazy for lunch that's going to give you like a big crash. For over 10 years now, pretty much every single trading session, I have 2 cups of green tea after I finish lunch. So I find that kind of steadies the energy in the midday. It's been something I've been doing for a really, really long time. I got some good loose leaf green tea, some really good stuff, and have a couple glasses of it, and it just kind of keeps the energy steady. But yeah, that's what I got for you there, Robert. From Scott, do I trade T-Triple-Q often? Yes, I do. I really like how T-Triple-Q trades. I like the pricing of it compared to the QQQ. I can just do a lot more with it in terms of having a lot more size for the movement. So I usually trade T-Triple-Q when I'm trading the Qs. Someone on YouTube wants to know what the red, blue, and yellow lines are on my chart. Yeah, so the blue line is the 80 EMA, the red line is the 21 EMA, the yellow line is the 200 day. I don't look at a 200 day on a 5 or 15-minute chart. It's just on there so that when I switch over to a daily chart, I can see the 200 day. I also like, but I don't have 20 and 50 SMAs on daily charts just for trend analysis. So 80 EMA, 21 EMA, really, really important to me. And then on your daily chart specifically, 20, 50, and 200 SMAs for trend analysis on their respective time frames. Back in the VTF from Vikas, I will have to say that seeing these turns and being positioned for them is challenging. Lots to learn. In retrospect, so many opportunities, but I couldn't see them and couldn't decide on how to risk properly. So I didn't take any trades. I just wanted to share that. Sure. So I mean, the biggest encouragement I can give is that when you're feeling, I don't know what the right word is. I want to say camera shy, but that's not the right word. But I think you know what I mean. When you're struggling to pull the trigger, that's when you want to use the virtual analysis paralysis. That's a good one. Gun shy. That's a good one. That's when it's extra important to use the VTF. Hey, I'm looking at XYZ stock right now. What do you think? Hey, I'm looking at XYZ stock. I'm considering buying it, but I'm not sure how to risk it properly. What do you think? Get stuff in the VTF for feedback from me, from the other people on the team. The worst answer that you're ever going to get from me is, hey, I'm sorry, I need a minute to look at it because my positions are wild right now, but I'll get to it as soon as I can. Utilize the team. That's what we are here for. It certainly gets a little bit crazy sometimes in these more bear market type of moves. From Richard, apart from tariffs and all the headlines, we're still not in a good place consumer confidence wise and overall economic data wise. Is the market ready for a bigger bounce in that regard? Yeah, I know that there's a lot of chatter coming out now on stagflation after that latest after that latest economic number. What was that? Was it the ISM? I can't remember what number it was anymore. So I know that there's a lot of chatter on that. It's about trends in the long run because things get priced in very, very quickly into the market. So what can give the market a bigger bounce is not necessarily the numbers that have already previously come out. It is the expectation of future numbers and how the numbers as they come out meet or miss those expectations. So I think that is the most important thing. We're definitely in a headline-driven market. So, for example, I'll use an extreme example that's not going to happen. We are already seeing here in less than 24 hours after the tariffs have started that Trump is potentially going to pull back on them. Let's say tomorrow he wakes up and he decides to get rid of them entirely. We would get a massive bounce back up in the market. So, bounces are going to come from headlines as they evolve. And Josh, again, to give him great credit on a comment he made pre-market, said that the risk on tariff stuff right now from a headline perspective is actually to the upside on the market because now they're fully in. They're here. I mean, I guess he could make them worse. He immediately said after Canada's retaliatory tariffs that he was going to do even bigger retaliatory tariffs. So, and then they'll do bigger ones, and then we'll do bigger ones, and we could just have like 1,000% tariffs on everybody and just close off all trade. But that eventually won't happen. So, again, it's a headline-driven market. As those headlines evolve, it'll move the market. I think that the headline risk is actually to the upside right now. And you also want to pay attention to extension because at these extreme extension zones, we should be getting a bounce to correct through time or price at some point. So, appreciate the question there, Richard. From Pete, just to check, you said 20, 50, 200 simple moving averages on the daily. Yeah, simple moving averages. And I basically just use them to measure the essence of trend with their slope. So really all I care about with those moving averages is what the slope of the moving average is. So in this QQQ chart that I have up right now that just has a 200-day, it does not have a 20 or a 50. The 200-day represents basically the long time frame trend. It basically represents like a year approximately worth of trading. So if the 200-day is sloping up, I just know that the essence of trend on the big picture is still higher. Right now, despite what we have seen here on this little mini market crash that we just had from QQQ 540 to QQQ 490, we just had a $50 pullback in the Qs. The Qs are still in an uptrend on the big picture. How do I know? Because the 200-day is pointing up. As simple as that. The 50-day is my intermediate time frame moving average. Represents about a quarter. If it's pointing up, the intermediate time frame is higher. If it's pointing down, the intermediate time frame is lower. If it's going sideways, the intermediate time frame trend is that there is no trend. And then the 20 is what I consider to be the small time frame on the daily. Represents about a month. Pointing up, uptrend, down, downtrend, sideways, no trend. And then you have trend continuity if all three of the moving averages have the same slope. I'm looking at a market that's got a rising 20 above a rising 50 above a rising 200. I have time frame continuity of trend to the upside. Or down, down, and down, I have time frame continuity to the downside. Or if I've got a 20 that is declining down and crossing through a flat 50 within the confines of a 200 that's pointing up, then I have a mixed message from the market. I've got a small time frame trend that's down, intermediate time frame trend that's flat, and a big picture trend that is up. So that's the extent to which I use those SMAs on the daily chart. Even more important to me, though, is that 8 and 21 EMA, because how I utilize that to measure price versus equilibrium is just like a really, really important part of my overall trading. Thank you, Michael. Michael Anthony. I do not use a 200 SMA on the short term. I do not use a 200 SMA on a 5 or 15-minute chart. It's just, I said it's just there because if I'm switching my chart back and forth like I am right now between a 5-minute and a daily chart, I'm not going to go in and take out and remove moving averages. So on the 5-minute, 15-minute chart, I'm really only looking at an 8 and 21 EMA. All right, I'm tired. What a day. I'm exhausted. good day. I'm going to wrap it up there. Have a great night, everybody. I will see you all tomorrow. I am Michael Straub I sold a bunch of stuff. Get such a big uptick in the market in that moment. I just got filled on all these offers. I couldn't even communicate it all at once. Have a great night, everybody. See you tomorrow.